On Tuesday, the Bitcoin price plunged from $49,900 to $48,300 following the release of the U.S. inflation data. As NewsBTC reported, the data came in hotter than expected. Instead of 2.9%, headline CPI came in at 3.1%, while the core CPI was even at 3.9% instead of the expected 3.7%. And the traditional financial market reacted negatively and dragged Bitcoin down with it as expectations for interest rate cuts have shifted further into the future. The prediction markets are now pricing in only 4 rate cuts in 2024 after CPI inflation reached 3.1% in January. But this is a huge drop in expectations, as just over a month ago, the markets were still pricing in 6 rate cuts. The Fed's most recent forecast was for 3 rate cuts in 2024. The probability of a rate cut in March is below 10%. And the probability of a rate cut in May is falling rapidly. In contrast to the S&P 500, however, the Bitcoin price showed a strong reaction and quickly rose again to $49,900. The reaction of the Bitcoin market is quite telling that for the short-term future, and the Bitcoin price is showing just that today. At press time, BTC rose above $51,500, marking a new yearly high. Here are 4 key reasons. Obviously, the surge in Bitcoin ETF inflows marks a pivotal moment for Bitcoin, reflecting a significant shift in investor sentiment and market dynamics. On a record-breaking day on Tuesday, the net inflows into spot Bitcoin ETFs reached $631 million, led by the 9 with an inflow of $704 million, signaling a substantial accumulation of Bitcoin. For the topics in this, key players like BlackRock and Fidelity played a significant role in this influx, with BlackRock experiencing nearly $500 million in inflows and Fidelity $64 million. The overall net inflow of $2.07 billion over 4 trading days, averaging over $500 million per day, highlights the staggering sustained demand for Bitcoin. And this demand is notably new capital, as GBTC outflows remain stable at $73 million, indicating these inflows are not merely a rotation from GBTC, but represent fresh investments. Nastragas, and hitting the 18 million smaller of the 120th century crisis, and Paris, the biggest role. Tonight, IMHO, the numbers under counts, the fundamental new investor demand for these ETFs, people assume all of the money flowing out of GBTC to date is rotating into other Bitcoin ETFs, but a good chunk of it is from inorganic holders. Long-term investors have backfilled that and added $3 billion more on top. I suspect the real new investor-led new demand is north of $5 billion and shows no signs of slowing. Fears of a Bitcoin crash, similar to FTX's sale of GBTC, triggered by Genesis' planned liquidation of Grayscale Bitcoin Trust shares, have been alleviated, as reported today on Bitcoinist. This second, the liquidation necessary due to Common A bankruptcy was initially viewed as a potential market downturn catalyst. The bankrupt lender needs to liquidate approximately 36 million shares of GBTC, valued at around $1.5 billion, as part of its strategy to resolve financial challenges stemming from significant loans and regulatory settlements. However, the proposed Chapter 11 settlement involves in-kind repayments to creditors, reducing direct selling pressure on Bitcoin. This strategy aligns with the interests of long-term Bitcoin holders, potentially limiting from market volatility. Great Shui, CEO at Exxon, highlighted, and the proposed Chapter 11 settlement requires Genesis to repay creditors in kind, i.e. Bitcoin lenders receive Bitcoin in return rather than USD. Notably, in-kind distribution was a priority negotiation topic to prevent long-term BTC holders from recognizing gains when receiving USD back. This would seem to indicate a substantial volume of lenders don't plan to sell immediately. The statement by CryptoQuant CEO Ki Young Ju that Bitcoin demand exceeds supply at OTC desk currently is a significant indicator of underlying market strength. OTC transactions preferred by the large institutional investors for their discretion and minimal market impact are reflecting a robust demand for Bitcoin. This demand-supply imbalance at OTC desks suggests that large players are accumulating Bitcoin, a bullish signal for the cryptocurrency's price outlook. The analysis of futures and spot market indicators by Credible Crypto sheds light on the technical factors signaling a bullish continuation for Bitcoin. The analyst points out, data supporting the United States continues of the most idea that was the diff. Oil reset back to levels before the last pump. Funding decreasing through this local consolidation. Spot premium is back. These observations suggested a healthy market correction rather than the start of a bearish trend, with the reset in open interest and the decrease in funding rates indicating the market has absorbed the shock and is primed for upward movement. And in conclusion, the combination of record ETF inflow has alleviated concerns over Genesis GBTC liquidation. Strong OTC demand and favorable futures and spot market dynamics provides a compelling case for Bitcoin's potential rally. Each of these factors, supported by expert insights and market data, underscores a growing investor confidence.